Welcome back to the ETF Inspector. It's Monday, November 10th, a little after 5:30 in the evening, and this is our daily recap of trades and holdings within the $1 billion club. That's YieldMax's CONY, MSTY, NVDY, and TSLY. All four have assets under management over $1 billion, and they are individual income strategy funds using a covered call strategy with synthetic combinations. Reminder, I'm on X at ETF_Inspector1. Follow me if you don't already. Please subscribe and click for the notifications if you haven't done that already, and maybe even hit the like button. You can save that to find out if you liked the video first, but there's a dad joke at the end, so you got that to look forward to. All right, when we take a look at the big picture, markets were reacting to news of what looks like an end to the government shutdown, even if it's maybe just a kicking the can down the road. So Coinbase up 2.84%, CONY not able to keep up, 2.3% increase, still a good day. MSTR, they didn't get the memo on the good day, down 1.26%. MSTY outperforming by about 50%, only going down 0.62%. NVIDIA took off 5.79% increase. NVIDY not able to keep up. Again, that's going to be because they're selling covered calls. So when the share price goes up too fast, it's going to run through it's going to increase the cost to close out your covered calls. So you can, you're kind of either capped or you got to pay to close them out and open up the upside. So 4.04% increase. And Tesla up 3.66%. TSLY almost able to keep up 3.25%. We'll take a look at our spreadsheets. We go into the trades first. If you're not familiar, YieldMax's website puts out trades somewhere around 5:30 every day. They came out a few minutes early, so I'm able to get them processed quickly, but it just comes out like this, and it's just, the option, buy or sell, and the quantity and the price. So I got to add in the total it by multiplying the two together, and then again by 100 because there's 100 shares in a contract. Then I have to apply whether it's a negative or a positive, so we can figure out how things worked out. So CONY, what they did was closed out their synthetic $300 strike for November 21st and made it a $310 December 19th synthetic. So that resulted in a $15.6 million credit on the trading day because the selling of the $300 calls brought in much more than the buying to close of the similar puts. And then going into the next one, it actually brought in, it cost a little more to buy the calls as far as the 310s, but the difference wise was nowhere near the difference on the closeout. So $15 million to the good. All right, when we switch over to the holdings, so we've got in orange here, that's what just changed out. So this will no longer be there tomorrow once the updated holdings come out. So the holdings upload comes out much later than the trades do. So we get the trade information, we let you know how everything went for the day, and then we update. Okay. There's 1.1 billion in assets under management, 202,100,000 shares outstanding within the fund, and NAV of 567. Those numbers are all how the day started. Obviously, coin going up 2.84% is going to increase the values, increase the NAV, increase the value of these synthetics. Let's see. But then the reason why CONY not quite able to keep up with coin is because the share price increasing took these calls into the money. We've got calls anywhere from 302.50 through 317.50 that are now all in the money in a range of 0.14 all the way through 4.8%. None of those got closed out today. They would have been pretty pricey with lots of extra extrinsic value on top of it. They've also got $320 calls that are still 0.6% out of the money that are sold. We skip down because we've got purchased calls to go along the other side of those call spreads, and then we have a bunch more. I actually forgot to change those colors. They're now in the yellow, less than 5% out of the money. We have 330s through 337.50s, 3.8 to 6.1% out of the money still. They do sell 100% of the possible calls, that being take the quantity of synthetic contracts they have, and then that's the amount that they would be able to sell in calls. Last week, they paid 8.87 cents per share. My guesstimate was that this week it'll be lower, a little over 7 cents. We will find out in 2 days on November 12th. Next, we go to MSTY. MSTY only had a single trade, just selling short or selling to open calls at 260, expiring this Friday. They did 1,000 of those, bringing in $297 per share, or a total of $297,000 credit on the trades today in MSTY. When we take a look on the holding side, they have synthetic combinations for $270 December 19th, and then $255, $270, and $300, all for January 16th. They are all underwater, all costing anywhere from $23 million all the way through $190 million to close out. So if MSTY does not make its way up to those strike prices, by the time they expire, they are going to be very pricey to close out. That is all built into the share price already, though, so that's not a future problem you have to worry about. As they increase in value, your NAV will increase. As they get more costly, your NAV will decrease. 969 is where things open today. As far as NAV, not quite share price. Share price could be different from the NAV. The NAV is just what a share is worth based on the net assets, those being 2.6 million at the start of the day with 271 million outstanding shares. It was a down day, so these will all go deeper into the negative, and that is why MSTY dropped down a few cents from where it was valued at when the day started. They obviously do not sell 100% of their possible calls, because we just saw the only trade today was selling of more calls. As we take a look at it, everything expiring Friday, anywhere from $242.50 through $267.50, are 1.3 through 11.9, might as well call it 12% out of the money. If they expire out of the money, then they cost much less to close out. Technically, they would expire worthless if they expire out of the money, but they don't wait all the way until closing on Friday to roll. They're going to roll sometime Friday, if not sooner, to the following week. So they are going to pay something out on the closeout. It's just a matter of how much, based on whether the contracts are in or out of the money. Last week, they paid 16.88 cents per share. My guesstimate for this week was lower, around 13 cents. So we will find out again on Wednesday the 12th. NVDY had some trades as well. Closing out a portion of their synthetic 1,000 contracts at the 205. So that's going to come along with the closeout of the options that go along with that. In both cases, so at this point, buying to close the sold put cost much more, because NVIDIA is below that 205, or at least it was when still is. So that's going to cost more to close out the puts than you're going to get for selling of the calls. But then on the other side, it costs a decent amount to close out this sold calls, just because there's still a lot of time value on them. And because the 187.50s were actually in the money. So that's interesting that they would choose to close out. So let's see. Everything was in the money. So I guess it makes sense. I was going to say if they had some out of the money, they could have closed out not at such a loss. But if they went into the money anyway, and you're going to be closing something out, they're always going to close out the deepest in the money. That's what they did. They took 1,000 from them and then finished out the rest, 9,190. So costly day, $4.1 million. I actually forgot to get rid of last week's data, so we can do that real quick. All right, next when we switch over to the holdings, we've got synthetics at 205 for November 21st and 200 for January 16th, both in the negative. However, the one after today's 5.79% increase, the 200 is going to basically be around break even. So that's a big basically $53 million increase in value on the day. So that was very nice. Obviously, it's going to be slightly under, being 95 cents the wrong direction, but not too far off. As far as their options that are already sold for the week, we've got 187.50s, which we just saw get closed out. That's why they're in orange, so this line will not be there tomorrow. And then 190s and 195s that also went into the money 2 and 4.5%. They do have 100% of their possible calls sold, so that is why they were capped on the upside and not able to keep up moving upward. 1.6 billion in assets under management at the start of the day. Obviously, that will increase based on that change. 110,300,000 outstanding shares. The NAV at the start of the day, 1532. Share prices climbed to around 1595. We do have earnings coming up for NVDY 9 days from now. Last week, distribution-wise, they paid 31.86 cents per share, so it was a very nice over 100%er. And my guesstimate that I made in my Saturday video, I keep mentioning it just in case you didn't see it, week look-ahead video for this series. Maybe I'm being boring, but the $1 Billion Club, this video series, I keep the same thumbnail. I adjust the title here, the date, and whether or not the underlyings or the funds went in or out of the money. This is really frustrating that I can't point to things without it going away, but and then give you a little pertinent information in yellow. All right, so I'm guessing 33 cents just based on them kind of flattening out their payments, paying out that huge win that they made closing out their previous synthetic combinations. All right. Finally, we have TSLY. TSLY, I did not hide last week's information yet, but TSLY did not make any trades today, so that portion's over quick. And so we will take a look. On the other side of things, they have synthetic combinations for January 16th at $450 and $470, both underwater. Obviously, things worked in their favor today, moving up 3.6%, but still leaving below 450 and 470. So they will still both have negative value. Goodness, I can't talk. But the upwards movement in share price today did take some of their sold calls into the money. They've got 440s, 442.50s, and 445s that are now in the money from anywhere between 0.05 and 1.1%. Yeah, that 0.05% is basically 23 cents in the money. They also have 447.50s, 450s, and 455s that are still 0.5% to 2.1% out of the money, all expiring at the end of the week. They do sell 100% of the possible calls that they can based on the synthetics. 1.2 billion in assets under management at the start of the day, 155,000 outstanding shares, NAV of 801. Nice little increase, a little over 3% on the trading day. Last week, they paid 14.7 cents per share. My guesstimate this week is 15.5 cents. So thinking that they're going to pay a little better than last week. And we will find out on Wednesday the 2nd. Okay, that's all I got for you. Keeping the video short and sweet. So thank you for watching. Appreciate all the likes, shares, comments, follows, everything, feedback. And I got a dad joke before we get out of here. So, you think swimming with dolphins is expensive? Try swimming with sharks. Cost me an arm and a leg. It's got to be inflation or something. All right, thank you. Have a good night, and good luck trading tomorrow. Catch you in the next video.